Yo, good morning, traders, and welcome back to another episode of Market in the Morning. Happy Monday, everybody. I hope you guys had a phenomenal weekend and hope you guys are ready to make some money because Market in the Morning starts right now. Yo, good morning, everybody. Good morning, guys. Drop some good mornings in the chat if you are ready to make some money today. We got Matt. What's going on? Piyush, good morning. Silver, good morning. YN, what's going on, brother? Ted, what's going on? Eric, good morning. Guys, let's get the ball rolling. Let's cover some of what market fundamentals are telling us today. We'll cover some key levels, take some trades, and set everybody up for success today. It is Monday. We'll cover some S&P and NASDAQ. There were some big headlines that went on over the weekend. The U.S. attacked Iran again. So in terms of a ceasefire, is it really holding? It's really up in the air right now, but markets don't seem to be caring nor digesting that type of conflict. So let's cover what happened in the futures market. Let's cover what happened overnight. Let's find some trade setups. Yo, good morning, Ethan, Lisa, good morning. Alex, good morning. Moth, good morning. Live, hello, market, everybody, guys, good morning. So first thing I always like to do in the morning, especially on Mondays, is I come to my market terminal and I say, okay, what's been going on? What's the move? I see that there's been a slight change to our bias. Before it was slightly bearish last week. Now we're looking at a short-term slightly bullish. So we could see what's supporting that right now. So S&P futures steady as U.S.-Iran ceasefire supports risk appetite and energy. So what supports this bias? U.S.-Iran stand down boosts global risk appetite. Elevated oil prices support S&P energy sector earnings. Let's see what else. Global chip and AI investment boom benefits U.S. tech. Now, I was looking into this over the weekend and I saw something about Google actually starting to limit Gemini use because they're running out of that computing power. So that's a little bit of a red flag. We're going to see this whole AI bubble that people are talking about start to hit a wall. Ozzy, good morning. I hope you're all doing well. Hope everybody's happy. Hope you guys all had a phenomenal weekend, man. I've been fighting some type of flu or something. I'm all sore, but yo, we're still going to kill it. Let's check our breaking news headline. And in fact, we'll come over to our news feed right now. And we're going to check our breaking news tab. Now, one of my favorite parts about Market's breaking news tab is our ability to search high impact. And we could look up the actual specific words that we're looking for. So I could look up something like Iran. And it's going to tell us Trump retains military options over Iran. Levitt says, hey, good morning. White House on Iran. Trump wants peace process to play out. Of course, we all do. These are all headlines. Look at this, guys, 16 minutes ago. So question sort of leads into, is Trump going to start being very loud online again? Because this week is NFP. Now, I'm going to show you guys what we have in store for NFP. And if you haven't already, guys, make sure you run that like button up. I do appreciate it. This week, today, Monday, we have absolutely nothing. Tuesday, we have, you guessed it, a little bit of nothing. We have Chicago PMI, which is a medium on the scale of impact. We have consumer confidence tomorrow and JOLTS tomorrow at 10 a.m. So we do have some big headlines coming out tomorrow. So be sure that you guys are here to cover it. Consumer confidence. Let's take a quick look at our consumer confidence for a moment. Let me just set that up. There we go. Consumer confidence signals household demand supporting Fed's growth views. Early read on spending and recession indicator. Occasional sentiment shocks, moves, equities, and Forex. Weak confidence could amplify downside growth risks. So something we can look for is how does it come out and how has it been coming out? One of my favorite tools too with market is the historical data chart, right? Give me an idea of the trend of this economic event. And what's great too, guys, you could actually take this to your benefit. And using sites like Polymarket, Kalshi, you're able to actually bet on how these events come out. So you could use market to actually make money in that betting field too, which is pretty interesting. Guys, I see a lot of gold comments, man. Let me know what asset you're trading, and we're going to dive right into it. Nawab's going to be joining us shortly as well, so very excited about that. We can take a look at gold at the moment. We see we do still have our slightly bearish and bearish bias. And if we take a look at our gold chart right now, something that's really going to stick out, right, is this down move we had from the overnight session. Sunday markets opened right over here. Markets opened. We are currently down 1% on gold from that overnight, from that Sunday open. So something to be aware of. On this chart, I have GC and XAU USD. Let's pull up GC in full right now. Come to our hourly time frame. Bullish on the pound, very cool. And what do we see? We'll delete that zone. Remember, delete any broken zones, any broken levels of interest that aren't valid anymore. Here's our open from Sunday, is going to be right here at 6 p.m. So that's our open right up here. I see we're trading below it. So this already gives us that bearish bias, that continuation. We see that we are still bearish. We could even look at our market terminal, still slightly bearish. Why? What's supporting gold to the downside? Well, French, US, Iran strikes and drone activity escalate Gulf conflict risks. Dollars set for strongest monthly performance in nearly a year. When we see that much momentum and that much strength in the dollar, that's a huge red flag for assets like gold, right? Now, both of them are safe havens, but they're usually in to hedge each other. So let's take a look at the dollar and say, okay, well, overall, how is the dollar performing? We know on the 5-minute it could pull back, but how is it performing on the hourly? How is it performing on the daily? And even the daily, look at something we saw on Friday, right? Friday, at some point, this candle, when we were live for market in the morning on Friday, this was not a candle, this daily one right here, was not a candle with a long lower wick. This was a candle that had a strong body to the downside. And a lot of people were actually saying, oh, well, the dollar's moving lower. Shouldn't we go bullish on gold? And yes, usually that is the case. But overall, the momentum is still very strong behind the dollar. It was up over 2% from 99.50 to 101.80. So very strong move there. Take a look at the hourly. We do still have this key level right here on the dollar. We're going to spread out a little bit right there around 101.10. So a strong dollar, a weak gold. We're going to be looking for those gold shorts to continue. Guys, we have Nolab joining us in just a moment. Yes, sir. Yes, sir. Drum roll, please. What's up? Good morning, bro. How are you?
How's it going, man? Good morning.
Good morning. It's going good. What's going on, man? How was your weekend?
My weekend was good, bro. I took a little time off with my girlfriend. We went to the cottage, did some work from there. It's relaxing, great time, great vibes, good summertime. It's always good to take a little break from the markets or just go somewhere in nature.
Yep.
Leave the screens, right? Yeah, enjoy stuff. How
There
about
you
you?
go.
How was your weekend?
Bro, I was all right. I've been fighting like some type of flu, man. I swear I feel like I was hit by a truck. I'm like,
Oh yeah, you feeling better
back
now?
to sleep. Nah, I'm ready to go back to sleep.
Well, let's get this rolling, bro.
Let's get it.
And then we'll get you back to sleep.
Nah, bro, we're killing it, man. It's Monday. We're hyped up. The energy is here, and we're plowing through it.
I'm excited.
Good shit, man. You want to share your screen?
Yeah, just doing that right now, and we can jump into this. So what we got planned. Sorry, I'm having really bad allergies this morning, but so fantastic. So let's jump straight into some gold analysis. Last week, we closed off with a bit of a retracement and rejections of 4,100 highs that we were talking about, and the key psychological area being 4,100 right here, and this price point where we previously took sells. So this same price point we tapped into, and you can see we have seen selling pressure and sellers jump back in on gold, specifically at market open as well. We didn't get much of a weekly wick created. We came right back down overnight to 4,025 on CFD gold, and then on GC, let me open up GC as well. Gold futures, we came back to around 4,040. So this price point over here right now is coming off of this intraday retracement that we had. And it was more of a mechanical retracement rather than a change in bias. That's why you'll still see market has an active, slightly bearish day trading bias, meaning that any potential pullback is likely to get faded out for the time being, as a focus still remains on a lot more of these factors that we have playing out here, such as sticky US inflation, higher for longer Federal Reserve stance. We'll see how this week's labor market data really plays into rate expectation. one thing you have to keep in mind, and this is something that Trump just tweeted out recently, was talking about the price of crude oil and how it's below the point when Iran denuclearization started. So it's below that price point, below the 70s right here, right? Or below that. Trump is saying that oil price is going to continue falling below $69 a barrel. And what this means for rate expectation is that if oil continues to trickle down, the rate of increase of inflation will also slow down month over month, right? And you're going to see markets then bring to price in a lower expectation of rate hikes. And what they will continue to price in next is an increased expectation of rate cuts eventually to come. So as we know, markets are always forward looking. Now, what this means for us on when we're looking at a market like gold, and this is where it gets very interesting, is that gold has just seen one of the most aggressive sell-offs that we've had in the past 5 years. We have not seen an aggressive sell-off like this sustained since 2022, the Federal Reserve's rate hike cycle that went on for the good part of 2022. It started off right at the start of the year in the first quarter after Russia-Ukraine market impact got priced in. Then we had the focus get changed to the rate hike cycle. And if you know anything about how the Federal Reserve and how these chairmen have previously hiked rates, is that Powell had the most aggressive rate hike cycle in modern history. This is, of course, not with Paul Volcker, who did the most aggressive rate hike and cut cycle ever. And he was hiking at that point, cutting rates by like 800 basis points at a time because inflation was so high during that time. You can go back, look at Paul Volcker's time. I'm not going to go too deep into it, but this was the most aggressive rate hike cycle in modern day history. So when we look at gold over here, I can start to see a few things. Okay, we've had a massive sell-off. Gold has just come down from 5,600 to 3,900. Okay, now if I look at it in terms of auction market, like how Imri often talks about, does this on a higher time frame look like a good buy price for gold? Sure it does. Does this price look like a good buy price for gold? Absolutely, right? So all of these areas are now technical areas we need to keep in mind that, hey, if a reversal was to happen on a higher time frame, we would first of all need to see clear fundamental bias shifting on market. You would see day trading start shifting to bullish, and then overall swing trading as well. But until then, you get these plays that often get sold off at these major resistance. And what it takes is a hand-in-hand symbiotic relationship where the technicals and the fundamentals start converging, and then you see a continuation in the plays of the opposite direction. So even when you look at the rate hike cycle in 2022, it took about a few weeks before we bottomed out. Yes, we had an initial push up. We came back down, reacted to that area, and it became our new swing low. So after that, you can see we had a complete shift in direction. Market started pricing in rate cuts as inflation had peaked at 9% in June 2021. And it had at this point come back down to 4%, 5% during the rate hike cycle. So markets then started to price in rate cuts. Plus, with the war, then started the October 7th over here. And then we had the massive inflows. Then, of course, like rate cut cycle gets priced in. Trump comes in, blah, blah, so many different things. And then, of course, the war starts, inflation fears, rate hike starts being priced in. And now we see those outflows getting priced in. And voila, we're at new lows on gold. And this, if it all plays out, in terms of, let's say, over the course of the next few months, that you may even see things like this. Maybe this ends up being the low that holds, and that when data eventually points towards the need to not hike rates, and instead the Fed can just hold, or even the market actually starts pricing in cuts because the markets are just greedy, then you would start seeing that shift in structure. And then we would start riding buys, and we'll ride buys up to 5,000. Now, what this means for now, for current price action, is that gold, if you were looking for sells, 4,100 was the place, right? 4,100 was the place. We saw sells happen overnight. Nothing that I would have taken advantage of just because this was the price level for sells. Now, I'm currently in buys from these lows. And the reason I'm in buys from these lows is because fundamentally speaking, currently, markets are waiting for NFP and labor market data, which is happening on July 2nd, Thursday. And if you guys haven't signed up, Kevin will drop the link. Sign up for our NFP webinar. We'll be doing some giveaways. We'll be sharing some sauce on how to trade the report, the release, how to prepare for it, and we'll break things down to the core, like we did for CPI last time. So sign up on this link, marketedge.ai/NFP-webinar, and I promise you're going to walk away with either a prize or an immense amount of value from the best traders that I know. Like I'm an okay trader, you know what I mean? I'm okay, but these guys, Imri, Jeev, you guys are beasts, you know, and you always have to surround yourself with people like that. I'm very grateful to be in the presence of some of the best on my team, like Kevin and everybody behind the scenes. So make sure you come join us and tune in. But let's get back to this. So I took these buys once I saw this lower time frame rejection over here. And the reason I took these buys is because I was anticipating a push towards the upside before we see further selling step in. The reason why I think that was going to happen is because we have been seeing selling happening overnight, right? You can see that market opened here, sellers jumped in here, sellers jumped in here, drove price down to 4,025. Now, on the intraday over here, in the recent 2 days, we've seen structure kind of shift off of these lows. So you know that when price is approaching a lower area, there's a higher probability of creating either a higher low or pushing down further before you see buyers maybe jump in from these lows over here, just because we are fresh out of these lows. Usually when you see gold starting to sell off, it will sell off after there has been a bigger retracement. Comparative to all these other times we've had retracements off of new lows, this is not looking too big right now. And in my opinion, especially with Trump also tweeting out like potential like current ceasefire and diplomacy talks, even though we know how long they last, I think gold still has time to squeeze up into 4,100 right up to here. And then that's kind of like the gate for the week where we need to pay attention to what happens at this price level. Because if this holds, this is an area where sellers are going to attack and they will jump in, and then you'll see gold get driven back to these low prices. If we push up from here, that may look something like you push up from here, you see intraday sets up, gold sellers come back down before buyers even attempt to buy this dip, okay? And then we'll see what happens there. But let's say this doesn't hold. Let's say 4,100 doesn't hold. Now, what we know is that we have a gate the gate gets open to 4130s and 50s. And that's what I would be paying attention to, is that this is a very, very important price handle for the week. And this basically determines what happens for the rest of the week. And that's why I'm anticipating that if this lower time frame price action currently continues to hold, as you can see, we have currently seen the first reaction over here is I was watching the markets drop into this level this morning. I saw it react. I did not enter a position. I waited for this double bottom. Once this came, this 1 minute candle, I entered right here. My entry right now is at 30 and 33, around 33 over here. So these positions are at break even. And the reason they're at break even, and I moved them closer to I moved them to break even sooner than I usually would. I would have usually moved it if price maintained above 50, but I moved it to break even because markets are still bearish, right? Like I'm not an idiot. I still understand that intraday positioning is bearish. I'm taking a counter trend trade based off of my experience, my knowledge and understanding and conviction of where the market can go into. And I wholeheartedly believe in the fact that, hey, there's certain price levels that have to be met before the market does its actual move for the week. So now that I'm in this, how can I manage this now, right? Like now, these positions are at break even over here. These are at break even. My target is 4,090s. And when price gets there, I will then observe and see how I can position myself for the week. I will take profit. I will leave a runner in case we break 4,100. But at the same time, if we start seeing rejections and price setting up, I will look for those short-term sells to a better buy price down here. Now, if we see sellers jump in from here where price currently is, I'm not really looking to take trades. The reason I wouldn't take a sell here, it's because to me, the more optimal price for selling is at the highs, is at these intraday highs. And because it's we've seen selling happen throughout the entire session, the daily candle. I don't want to be selling right into this low, right? This would be a bit more of a like a, even not even a B level setup. This would be your C minus setup. I wouldn't like to take these sells driving into the lows. Yes, they could go straight into 4,000 before you even see buyers attempt, or you see a bounce happen at 39.80. But it's just that this is the price handle that I personally want. Now, that doesn't go to say that you guys can't take this, right? Like you should be taking your own positioning and just taking what I say with surface level and adapting it into what you trade and how you trade, right? Because at the end of the day, you have to find your own edge. No one, regardless of who you follow in the space, regardless of how much experience they have, whether it's G, whether it's Imri, whether it's me, whether it's Kevin, regardless of who you follow, you have to have your own edge in the market. You'll never be able to trade my edge. I'll never be able to trade Kevin's edge. I'll never be able to trade Imri's edge because that's their own edge in the market, right? And if you have an edge, then you'll know that over a consistent period of times, I am profitable or I'm not profitable. And if you're not profitable, you shouldn't just be jumping from strategy to strategy. Focus on honing into what the missing pieces in your trading actually are. If you're lacking the fundamental knowledge, understand what's actually driving the market you trade. If you don't understand which headlines are impacting and you get confused, just keep your market news feed tab on breaking news or high impact. That's why you only see the ones that actually cause market impact. Trump on Iran an hour ago. Iran has requested a meeting. It will take place tomorrow in Doha. So now that's what you have to adapt to, is especially with markets always changing. You can see how after having such clear one-sided movements, we're just now coming off of just coming off of some technical lows. And all we're trying to do is position ourselves for better sells right now. So even if we're in these short-term buys looking to get a little squeeze towards the upside, remember, you're never going to make money if you don't risk, right? And if you have the conviction, I don't mind risking a buy here, especially given that now it's at break even. For me, this is a loss-free trade now. I cannot lose this trade even if I wanted to now, right? And now I just have upside. And guess what? If this plays out for the New York session and going into NYSE Open in about 45 minutes, if this plays out, I'll be in profit. I'll take this profit and I'll risk some of it on potential sells if we get this sort of price action.
Yo, Sean, I like that one. We're saying no risk, no Rari. You said no line to catch the fish if you don't cast the reel.
Wow. Beautiful. You got to risk it to get the biscuit. Exactly.
That's it.
So you see what I mean? This is how you trade with efficiency, where you're not jumping in on sells on the break of these lows and then getting squeezed out when price retraces back to you're positioning yourself. You're buying low, you're selling high. I'm not selling when I see breaks of this lower time frame structure here. I'm selling at very key price points because I know I want to align myself with these intraday levels. Just like over here. Just like over here. Look how this played out, right? Similar to where we currently are. We had this low printed. We had a fundamental catalyst, which was Trump announced. This was, I think, this was the announcement of the deal. And then we had the push up into here, right? Pushed up into here. Price came back down overnight. We pushed up during London session. And then we finally set up intraday positioning the following day. Right. And that's how that ended up playing out, is that after the following day, we set up intraday positioning, but we tapped into this area multiple times, right? It wasn't just once that we tapped into it. So that's why I'm kind of anticipating that we could potentially push up into here, given that we also have non-farm payrolls, unemployment rate, excuse me, later on this week on Tuesday, right? On Thursday. So those data reports are going to be what the markets are going to position themselves for. Unemployment rate, 4.3, minimum 4.3, maximum 4.3. We went over this last week, how the forecast is right on the maximum. prior was also 4.3. So if we come 4.4, that's going to put emphasis that the labor market is weakening. If it comes out 4.4, that exceeds maximum expectations that the institutions are expecting. So we'll get a fire emoji here if that comes 4.4. Okay. And then what you'll see is that higher unemployment rate. So if it's above 4.3 being the maximum, and also market's forecast is 4.3, if it's above there, that means a bearish dollar. And why does that mean it's a bearish dollar? Because higher unemployment rate, markets will price in an increased chance, an increased probability of rate cuts to come. And that is going to mean dollar outflows, because lower rates mean the dollar gets devalued. Now, if I change this impact and I want to see what the impact is on gold, higher unemployment rate will push gold up. Okay. So now if unemployment rate comes out higher than forecast of 4.3, we're going to see that increase in inflows on gold, and gold may even then again break above 4,100. And that's what I mean. It's a very key price point for this week, 4,100, as well as if I look at dollar right now. Dollar, remember last week I mentioned we talked about this exact number, 101.04. We drew the line before price even came down to here. Who remembers it, guys? If you were, drop a 1 in the chat if you were here on Friday and you remember us breaking down if this low holds, and this low held, right? This low held on dollar. So if this low, if let's say if labor market was seen as hot or was seen as struggling, right, with unemployment rate increasing, and let's say jobs comes out lower than prior, maybe 120s, right, which is still within the minimum maximum, but it's above forecast, but it's still lower than prior. Okay, lower than prior, higher unemployment rate, markets start to price in increased chance of rate cuts. You're going to see gold inflows, you're going to see dollar outflows, you're going to see 101.04 get taken out. This is where you got to think. Like, you have to keep these scenarios in mind and then start to map them out on the charts, because that's how you prepare for every single opportunity, every single thing that could happen in the market, and you're not caught blindsided. Like, I had known that I enter on this double bottom, there's a chance I get completely taken out the following 15 minutes, or once this candle was continue, start new. Once this was happening, I was like, oh, cool, okay. Like, if this, and at this point, my stop loss was right down here. I was like, okay, cool. I'm probably gonna get taken out if we don't break above these, and I'm fine with that. But then there's also a chance that, hey, we push up here, reject 50s for the time being, come back down, and then push up, and I'm fine with, and I'm okay with that. But that's a scenario I prepared for. So when that actually happens, like over here, I'm not then just closing my position, but instead I just move these lower ones to break even. You see how this is how you map out scenarios. This is how you understand, okay, if unemployment rate comes lower than forecast, 4.2, that's still within the range. But if it comes 4.1, oh shit, now I'll see a very bearish gold, and I'll see a very bullish dollar, because that's going to mean lower unemployment rate means stronger labor market. And guess what? The Fed can hike to tame inflation. But this is what's important. The next week, the following, I think it's the 14th or 15th, we have CPI. And that is we'll see how oil prices are going to impact it. And we'll see whether a CPI comes out lower than forecast. If it slows down, guess what? Markets are not going to price in rate hikes to come. And then gold will start to fade out some of this previous moves where we priced in those rate hikes, right? Like from here, maybe we'll start to fade those out. So that's it, positioning. And this is how you build that narrative and that picture for you to execute on. And then when you have that picture, it gets so simply translated. Whether you use market, you go here, day trading bias, I have my target levels. I know price can push up to this resistance at 40.95, and we could see sells coming from there, right? You have all these bias factors that go into it. Now I can come to the market, sit down, understand, hey, my optimal sell positioning isn't from 50s. It's actually from 4,100. That if I'm looking to align myself with the day trading bias on market, that I don't want to just scalp a sell. I'm looking to be more focused on these bigger moves that the market is known to do. Like every single one of these intraday outflows, look how long of price action it played out with, right? Like you had gold sell off from 4200 to 3900. That's 3000 pips in just a week. So things like moves like this happen, but it requires patience, and it requires you to understand that positioning is just as equally as important as having your analysis correct.
Yeah.
Your analysis will be correct majority of the time, but it's your execution that gets fucked up and you mess up on the positioning. And that's majority of the cases with whoever I talk to, is that positioning gets them messed up. And then when the market actually starts moving, it may be 2 sessions after they were trying to take their attempts and they're out of a position. But if you have conviction, you know that your analysis is on point, then you can just enter. Even after you take a loss, reposition yourself. Let's say you front ran this sell over here, didn't play out, minor loss, you entered here, and guess what? Now you were up about 700 pips overnight. So when you paint these scenarios, you can adapt to both sides. And now I'm in these buys looking to ride them up to here, where then if I get rejection, I'll look to position myself for shorts. Now I've just benefited off of both sides, or I'm looking to benefit off both sides because I understand the market that I trade. And this is one of the primary markets I trade. So most people, instead of looking at 17 different things, and listen, as a CEO of a trading platform, I see how many markets people look at. And the people who are the least successful are checking out 20 to 30 markets at once.
Yeah.
Okay. The people who have the most success in the markets are focused, man. They're killers. They hone in on a single market. They execute on every single great positioning and play in the markets. And guess what? You go to them and they'll be like, yeah, I rode every single pullback sell on gold for thousands of pips. While the people who are chasing the crumbs are getting the smallest plays every market open, every session open, and then in and out, exhausting energy. And you've probably heard of it. If you compare an investor to someone like a day trader who takes 20 positions in a day, 30 positions in a day, that the investor is way far more profitable than the day trader is in a span of 30 years. Because day traders are just like monkeys who just like to press keys on buttons, right? But we don't want to be those monkeys. We want to be professionals. We want to execute with conviction in our analysis, because we're not here to gamble. If you were here to gamble, you might as well open up a sports betting account or go to one of the prediction markets and start betting on what Trump will say or what bow tie Kevin Warsh is going to wear at the next meeting. But instead, we're professionals looking to execute in trillion-dollar markets with precision. And this is algorithmic. These markets are fully algorithmic. So when you're executing these, your entry and your positioning needs to be accurate, because you can see very accurately that the market is very mechanical. It is algorithmic. You can see pinpoint accuracy on the financial markets, how rejection right at 4,100. You see reactions right at 40.25. So your entries must be precise as well. You don't want to jump into a buy move at 40.50 when the buy started from down here. You don't want to jump into a sell play at 40.42 when the sell started from 40.96. You must be very precise, because that's who you're crafting your trading self to be. You want your trading self to be full of precision, right? You want to be like a robot in the markets, emotionless, executing when price is at your level. When the market is at your level, you execute. Okay. Kevin, do you have anything you want to share, go over? I feel like I've given some analysis here. ES, oh, sorry, maybe we just quickly cover ES.
Yeah.
ES, dude, we called out these lows perfectly last Thursday and Friday. This was a beautiful play that we were talking about, that even when we were pushing off of these lows, we mentioned, hey, if this continues to hold, this is that same area we saw structure shift not too long ago in June, right? After coming off of this 5% low that Kevin called out over here. Dude, this guy called out this low. He called out the low over here. Come on.
Yeah, that's a good one.
Dude, this is not a coincidence, guys. Kevin is pushing some buttons behind the scenes that is causing money to come back into U.S. equities. So we're and even on market, Kevin called it out. Bias flip to bullish. What's going on, Kevin?
Let's get it, bro. I got the flip phone.
Yeah,
Right to the White House.
Right to the White House. A rotary phone, actually. So we're looking for buys on ES, and the way that I trade is again different to the way that Kevin trades, but our overarching analysis and positioning is on point and aligned 90%, 9 out of 10 times. So buys from here, I would love to wait for NYSE open, or just let's say we get a push to up here, quick sell, and then buys from here. These two areas would be great buying opportunities on ES, mimicking similar price action to over here. Just paying attention to gold here. If it actually works out that 50s holds up over here and then we just kind of continue to chug down and take out these lows, I'm fine with my break even over here. I'm fine with it. This to me was just a counter trend trade because I'm looking to enter the shorts here. I'm not really looking to enter the sells over here. And the reason being, because I told you, is that the move for sells for me is up here. Is the move started up here. And if I look at the most immediate price action, I don't want to enter a sell and be one of the chumps who entered it like 2 days after the move actually started. I want to be one of those guys who's at the forefront of those moves, front running it, just like how we did every single sell play, every single sell retracement here, the sells we took over here, right? The sells here, countless times. So just based off experience, this is not a trade that I would personally like to trade. So if you are more aligned on the sell side and you think pricing come down here, by all means, execute that trade. Take your opportunity in the market. Take your jab. You're not going to get the Ferrari unless you take the risk. So you're not going to put food on the table for your kids unless you take the risk, which is more important. Depends on where you are in life. But this is financial markets. Either way, you got to have a plan of attack. You got to actually attack when that plan shows itself. And then let probabilities do the rest. Let the market do its thing. All I care is, okay, my positioning is in. Voila, bro. There's nothing I can do now that will make this position win or lose. There is nothing that I have any way that I can shape or manipulate the market in a way where it can push to my target. All I can do is just observe it and wait for more information. If I get information that doesn't align with where I want the market to go for this trade, guess what? Either I take a break even or I let the trade run to a loss. In this case, stop loss at break even, I'll happily take that. Now, in the other case, if this starts going to my take profit, amazing. In both situations, I had no impact on where the market was going. All I could do was position myself from a very precise point that I saw mechanically buyers jump in at the first sign of tap here. And then I just waited an hour and a half before I got my entry and then executed with precision. So again, I'm still bearish on gold intraday. I'm just looking for this sort of play. I don't like the sell from here personally, but it all comes down to how you trade, who you are as a trader. And if you are looking to take these sells down, by all means, feel free to execute. I would just much rather be patient and wait for better intraday positioning.
Awesome, man. Yep. Guys, all about patience. A lot of people jump on the charts. They think I got to find a trade right now. Markets are moving. I got to be in it.
Yeah. Yeah. And that's every time that I have done that, that has always been the downfall of me in that day, in that session. I have always, every time that comes to my mind, the markets are doing something. Oh, I got to be in it. Like, dude, I know I am destined for failure for that session. There is no way anything goes right in the markets for me the moment any of those emotions arise. So the moment those emotions arise, you have to take a step back. You have to hone in. Hey, that's my monkey brain speaking, that I have gone through. My ancestors have gone through hundreds of thousands of years of evolution, and they have not gone through all that endless suffering and pain for you to sit around twiddling your thumbs and buying and selling every 2 minutes and losing valuable money. Have some sense, man. Understand what the value of each dollar is. Since I was 15 years old, 14 years old, I was working, dude. I worked making $8 an hour. I worked making $10 an hour at a movie theater, putting popcorn in for people, brooming popcorn after the movies were done in the theaters. Like, you have to understand the value of a dollar. Now, I understand. I know the pain of what it means to blow an account because of how monkey brain one can be. And keep in mind, you're gonna encounter devils on each new level that you reach. New levels, new devils. You know, the old saying is old as time, is that every time you level up in life, there are going to be new devils that come and try to knock you down. And it's just a test. It's just a test from God. It's just a test from the universe, whether you're able to handle it, right? If you're someone who makes a bunch of profit and then the next day loses it all, clearly you're not ready to handle that level of profit. But regardless, you have to fall in love with trying, because if you don't try, you'll never know if you win or lose. If you win, amazing, you're going to try even harder next time. If you lose, fucking amazing, because you're going to learn from it and you're going to try even harder next time. But you must fall in love with taking the risk and trying, because without taking this risk, I wouldn't have been in profit right now. Without even planning out this scenario, and then if the market comes up here and I take this risk, I wouldn't even know about this trade. So you build a plan based off of fundamentals. You understand I need to execute and try on this trade because it's a part of my plan. If it doesn't play out, it doesn't play out. Let go of that mindset, that scarcity mindset, that, oh shit, man, I'm gonna lose money. Dude, you're never gonna make money if you never invest money, if you never trade with money, if you never invest in yourself. How have you ever seen a bodybuilder who goes to the gym for 10 years, working out every single day and not be jacked as fuck? No. Have you ever seen a trader who has showed up every day for the last 20 years and consistently had a plan and attacked and documented what he's done not be successful? Absolutely not. It's that these repetitions in the marketplace, regardless of what discipline you're operating in, whether it's the financial markets, whether it's that gym, whether you're an aerospace engineer building the next rocket that's going to take us to Jupiter, whatever it is, it's trial and error. Everything takes repetition. God isn't going to give you a bag full of blessings because you've tried 100 times. God's going to give the person a bag full of blessings who's tried 50,000 times and he's failed 30,000 of those times, because he's resilient. He's shown the universe, hey, I have what it takes. I deserve this because I have put my all into mastering what I set my mind to. Now, this is just as mechanical and technical as it is psychological. And every element of psychology plays into the financial markets. If you are someone who is angry, I'm telling you, I've never seen someone who's angry make money in the markets. Have you, Kevin? Have you ever met someone who's pissed off and angry? It's always the ones who are calm, who are level-headed, who aren't operating on a low IQ, acting like monkeys.
Can't be emotional and patient.
Yeah, it can't be emotional, man. You can't let your emotions override your logical state.
Yep.
And that's not even just in the markets. If you let your emotions override your logical state, it could be the despair and the ruin of whatever you're facing in that moment, and you don't want it to be. There has been times where, regardless of whether it's in personal life, whether it's in academics, whether it's in finances, whether it's in your job, there's been times where you've been under stress, and if you get super emotional in that moment, you may lose your job. You may lose all the money that you have in your investment account because you made a bad decision. You may lose a relationship. You may get into an argument with your best friend, something. You can't get emotional. You have to take that step back, understand, hey, this is my monkey brain. As soon as those emotions come up, guys, this is my ancestors from 100,000 years ago. This is them pulling me down. But the rest of my ancestors went through so much evolution. I'm not going to spend my time chimping out on the charts here and over trading. You know, like, I want to be focused.
On the charts.
Yeah. That's what happened, dude. Like, I remember those days. Like, I would be up at 2 a.m. trading London session, and all of a sudden I black out because I just over traded and lost my entire account. And this is when I was like 19, 20 years old. So the pain I felt of losing a $2,000 trading account back then was far greater than me losing 5K on a trade now. But again, it's because I tried 50,000 times and I failed 30, 40,000 times. And in the more recent 4 years, I've been extremely profitable, and those are my last 10,000 times that I've gotten those blessings from the universe. But I've gone through those years where I had to execute. I took those losses. I was acting like an idiot in the markets. I was acting like full monkey brain. So if I can come here and tell you that all of that is avoidable, and all of that is avoidable with just one big aspect, and it's patience. It's just, let's just first analyze, plan, and just be patient. Let price come to us. Let the market come to us. Now, so again, gold, what we've seen so far in this session, we've seen this double bottom where I took these buys. We've seen a higher low printed. We've seen reactions at 40.50 again here for the time being. Where can we go? If we get above 40.50, we can squeeze first into the 70s and then into 40.90s, right? If we reject this and continue rejecting it, then we can head back down to 40.25. In that case, I will happily take a break-even trade on here, and I will not be looking to execute on those sells, because to me, I like my sell positioning from up here. I know that I would rather like to take that sell from here than here, because to me, this is not as attractive of a sell price after the market has already sold off the entire day since the start of the weekly open.
Yep.
Yeah, thank you so much. These are levels that we map out on market in the morning. These are levels that we've had since we've been riding like sells from up here. So yeah, these are like levels that just work, and it's things that we back tested and just played around with.
Awesome. Be careful on longs. I know somebody said longs on ES. We are at the top of our current range from the past few days now. I just want to share that real quick.
Yeah.
We've been range bound. Markets are sort of anticipating these non-farm payrolls and employment data that's coming out. So if we extend it to the left, we see that since Tuesday of last week, we have not been able to break above 7,500 on the ES. And right now we're trading into 74.75. So as much as, I'd like to be long on the S&P as well, I do want to be realistic with where we are currently trading and the whole buy low, sell high. I think a lot of traders are going to go into today thinking, oh, we had a big move yesterday, overnight sessions moving higher, we're bullish, let me go long here, and then markets pull back right to the bottom of the range. Not a crazy move, just back to the bottom of the range, but if you're measuring it risks to reward wise, could still be a great trade setup to take us right back down there.
Yeah, absolutely agree.
A breakout, though, I would love to see a breakout, retest, and push higher. So this is going to be my key zone on the S&P today myself. 74.75,
yeah,
74.95.
Yeah, you know what? Like, I would love to see the positioning for those buys going into 4th of July. And just riding those buys towards the upside. Like, if we can really get that positioning down from, like, in my opinion, like 73.60s, 73.70s, or even like 74.20s after like an NYSE liquidity move, open liquidity move or liquidity grab. And then we can position ourselves for 4th of July. Dude, I think we could ride those buys to these highs up here. You know what I mean? Like, just think about it. Trump, I don't think Trump can let the stock market not be at highs on 4th of July, right?
Yeah, no, seriously. He's got to gloat about something, guys. It's got to be something.
Yeah.
And you make a great point, right? Markets are able to sell off, and these institutions are able to position themselves into a better area for price to move higher from. Institutions don't want to buy high and sell higher. They want to buy low and sell higher.
Yeah, 100%. And that's what we always preach, is that I don't want to go into gold sells from 44,038 when start of weekly open, markets have been pushing down since 4,080. I don't want to jump in on a move like 90% after it's done. That to me is like that. Is that the first thing I come to the market, the teacher tells me is to never sell low. And what do? I go against it. It's like, dude, come on. Like, you were told to pay attention to what you were taught from your teachers and your masters. Like, come on, you know what I mean? Let's be, we're not children anymore. And this is where it's tricky, and this is where a lot of people get confused and get completely blindsided when they first start trading, because because, and this is where it gets real. The financial markets is the only environment that you have ever participated since you have been born that has no ground rules, that there are no rules here. You have to set your own rules. There's no rules. There's no one telling you you can't be in a trade at this time. You can't be in a trade at 12 a.m., that you can't be in a trade at 4 a.m. There's no one telling you how much you can't risk, what you can't trade. There is absolutely no rules here. And this is the only environment in the world that no rules exist. Society has rules. Your neighborhood has rules. The towns you live in, the cities you live in have municipal rules. Your country has national, federal laws and rules. The financial markets are a free-for-all game. So when people come to the financial markets without a plan and they come into this free-for-all, they're absolutely shattered. Their perspective is shattered because they are all over the place. Little by little, over the course of their first few years in the markets, they start developing a plan of attack on how to encounter the markets. And then in their fourth, fifth year, they're like, oh shit, there's a lot more to this than I ever thought. So I'm going to go deeper into this. I'm going to study fundamentals and go now deeper into the macroeconomics, geopolitics side of things. And then they spend the next 2-3 years piecing that together. Yep. So that's why you must have that set of defensive rules, both on, again, these rules apply both on the offensive and defensive side. You need to have a plan of defense for your offensive positioning. I know that if I execute these sells and we break above 4,100 and we get like a 30-minute closure above there, I know that that's my defense, that I gotta take my loss there. I gotta let my buy runner keep running. That keeps going in profit, covers some of my losses. And now guess what? That's my plan of a defense for this position, but my offensive plan on my buys is still going on. Now, if I come to this environment and I don't have any plan or I don't have any rules for myself, again, I'm operating like a monkey in the wild. I'm just jumping branches to branches, making monkey sounds, and just leaping around, having a living like I'm a child in the financial markets.
Yeah.
And if you're a child, then first of all, you shouldn't be trading the market. It's time to play some GTA, wait for GTA 6. But lock in to the point that you need rules over here, that you must be the one deciding the rules for yourself. That Kevin's rules on how he trades aren't the same as my rules for myself. Yeah. My rule is that, hey, I'm not going to take a C-level trade, meaning sells from here to ride down to here, because sells have happened overnight. So when people come here, they're all shattered. Their perspective is shattered. They're like, what? The market's out to get me. The market's out to get me. No, it's just that this is the first time you've operated in an environment that has no objective rule set. It's every rule that you create in the space is fully subjective to how you trade. It's how you perceive the market. You need to have responsibility and accountability here, is that every action that you take has a consequence, regardless if it's in the market, it's in your job, it's in your relationship. Every action you take has an opposite or equal reaction. So I took this buy. I can either take a loss or make money from it. It's a very binary. It's either 1 or it's a 0. Either I profit or I take a loss. And in the middle of that is where I need to maintain my psychological state and make sure I don't devolve into a monkey. So if I'm in this position and I'm in drawdown, I got to remain just as cool, level-headed as if I was in profit and I'm relaxed and I have my position at break even. I have to remain the same level-headedness, because managing a position is just as equally important as executing on it. But once you executed on it, you've done majority of the work, and then you just have to let the market do its thing. And whether the market stops me out or whether the market takes me to take profit, all I know is that I tried, because I'm in love with trying. I'll try till my very last breath. I'll be on the deathbed at the hospital with my laptop open, looking up at the charts, because that's what I love to do. I love to try in the markets. I love to try in life. I love to try to build a company, even though people telling me, hey, this will never succeed. And guess what? It fucking succeeded, because I tried, dude. It's always better to take the risk and try than to have regret of not doing it. So anybody tells you, if you're in a sell right now and you see me in a buy telling you, hey, buys are going to go up there. Don't close your position, man. Try on that sell, because who knows? It might play out for you. And I'm the one who's wrong here and I get taken out. And that's fine, because that's the probabilities here. This is the markets. The markets are never wrong. It's always us. It's always us internally that fucks up, and that gets manifested as a mistake in the market. It's always a psychological mistake that happens first. And as soon as we manifest that into an action, and we set our stop loss to break even too early, or we close our position while we're in drawdown when we shouldn't have touched it, that action has a consequence, but you learn from it. Every time I've manually interfered with a trade, it's always played out. 9 out of 10 times it plays out, but I manually interfered with it because maybe I risked a bit more and I was in drawdown. So that's a mistake on my part. That's not the market's mistake. The market was just doing its thing. I had my execution. I should have left it. It would have never hit my stop loss, but I was just over leveraged, and that's where I fucked up. So this is why you have to try, because on the end of each trial is things that you can learn from it, whether it's a positive, whether the outcome is a positive or negative. What you know is that the lesson will always be the positive of it.
There we go. Beautiful. Yeah, right. What more do you guys need on a Monday to get you motivated and started and ready for the week, man? Yes, sir. Market.
Absolutely. And on the right side of the markets too,
Yeah.
Like this is from 7. I took this at 7:30 a.m. It's almost 2 hours in. See, this is what I mean, guys. It's if you want to catch moves like this, expand that time horizon. Expand that time horizon. Let the market do its thing. For all I care is that market could push down to here and then push up. And guess what? I'll get taken out break even, but I'm fine with it, dude. I have so much more other shit to do in my day that I much rather wait for the next intraday positioning, which I know will just happen tomorrow. So we'll be back at it, attacking the markets, making a few grand and closing the week off profitably. What more do I want? Like, really think about it. Look at your week to week expenses. Okay. If you can cover that in the markets and maybe some more that you can put into your savings, or roll that money over into your long-term investment account, which is what you should be doing with your trading profits, right? Using it to pay some bills, putting some in the savings, but then taking, let's say 60% of it and rolling that into some long-term stocks, whether that's, and let's go into a bit of that, like whether that's some tech stocks. Things that I'm looking at right now are QBTS. I'm also in DRAM, the memory ETF, if you guys are a part of this. Kevin, I don't know if you're in DRAM or if you've bought DRAM.
I am not.
Yeah, this is something that I'm looking to hold long term for the next 5 to 10 years. So the DRAM ETF consists of like Micron, a few of like the South Korean, like Samsung's a part of it, and a few other South Korean memory manufacturers and memory companies. That is very essential, and a big pipeline blockage for AI development is like the memory, just like how energy, nuclear, just grid is another one as well.
SanDisk is in that.
Yeah. Grid is another one as well. I think grid long term is fantastic for like 250s, even 300s. I think grid can go up to. But this is, again, these are like long-term plays that you're trying to play for that AI race in the next 10, 20 years, right? So things like this, like if you have parents who are older, invest for them, invest their money for them,
Yeah, take their savings out. Don't tell them, and just throw it all.
No, that's not. Put it on red. Just take your mom's retirement, go to the casino, put it on red. Why don't you try on that, buddy? Try. You know how we said try things? You gotta try. But no, what I'm saying is that if you're a trader and you're trading your own personal account, and let's say you have parents who are older who don't invest in the markets, just invest for them. Invest in some stocks. Right. I'm not saying trade their money, but set them up for success. If you have knowledge and understanding the financial markets, the best thing you can do is convey that to other people. Give that value. Tell people, hey, I'm looking at Robinhood. Dude, I've had Robinhood buys since 30s over here, since Donald Trump did the trade war, and I bought at the lows of Robinhood. I also bought NVIDIA lows at $88 a stock last year. But I had these lows, right? And I got in again down at 69, 73, 74. And I told everybody, I was talking about, hey, I'm looking at Robinhood. I think Robinhood's a good $200 stock. That in the near future, in the next few years, Robinhood is none of this is financial advice. It's written all over markets. It's in the description. But the point being is that if you are knowledgeable in the financial markets, the best thing you can do is convey that knowledge to other people and help them and set them up for success. Because I've always said this, is that what goes around comes around. The more you give, the more you get. The more analysis value I drop here, guess what happens? The more winning trades come for me. I don't know how it works, but it ends up working. It's the butterfly effect. It's like if I held the door open for an elderly woman, I don't know how, but somehow 7 years down the line, I'm going to cash out with $20 million somehow. And it's going to be because I held the door open for that lady, because the universe saw that, God saw that. He's like, wow, this guy does so much good in the world. He's always giving value. He's always helping others. He's so generous. He loves his family. He loves his friends, his relationship. They're all benefiting from him. Let's give him more blessings. Now, do you think you're ever going to win a trade if you're not holding the door open for an elderly woman, if you're not smiling at everybody you see? No, man, it's all connected. It's good karma, right? What you do outside, outside of the markets gets reflected in the markets. If you're a horrible person outside, you're never going to be profitable in the markets. It's because it's all psychological. Anything you go through, everything you do automatically gets reflected, whether it's now or whether it's years down the line. Right? It's good karma builds up, but so does bad karma. Yeah, in the short term, you might see a horrible person winning, but I'm telling you, they will get what's coming for them, because that's just how the law and order of the universe is.
Nope. What if I take the elderly woman's money from her and invest it for her?
All right, somebody call the cops on this guy right now. Somebody call the cops on this guy. We're talking about a plan in the financial markets. He's talking about a different sort of financial plan, huh? But yeah, solid work, guys. Great execution on gold buys. Just remaining patient. Again, intraday, I would love to align myself on these sells from these higher price points. Whether that plays out or not, I don't care. Whether gold sells off from here after rejecting 40.50, cool, man. Like I'm just gonna wait. Like it's start of the week. We have NFP. Last NFP. Remember how many setups we got? Tuesday we had the setup. Thursday we had another setup, and then we were positioned going into NFP, and we made a shit ton of money that day and the days before. And then Tuesday the following week we took another 3,000 pip trade. So it doesn't matter if it doesn't play out today. All I know is that eventually I'll get my chance where I'll get my intraday positioning playing out with perfection.
That's it, man. Just build that consistency, build that routine, follow it daily.
Yes, sir. Yes, sir. That's it, man. That's what it's about.
I was thinking to myself, a lot of people say without strategy, you're just gambling. But even professional gamblers have a strategy they follow when they gamble. So if you're not trading with a strategy, not trading with a routine, you might as well just be flipping a coin and hoping for the best. Like there's not going to be any follow through. You might as well just maybe even just donate your money at that point.
Like, yeah, it's better off in someone else's hands than yours. Like it's better off if you're going to decide to gamble your money, just give it to your mom, give it to your dad. They actually deserve it more than you do.
That's it. Gotta take care
and dude, like I'm telling you, if you want it, this is one thing that really, okay? One thing that I would always struggle with is that is as you level up, you go from making, let's say, $100 a trade to making $500 a trade. Then after a while, when you're up $500 a trade, you're not satisfied. So you start to lose value of it. One thing you should always keep in mind is that, let's say you make $2,000 on a Monday, right? And you have 5 days left. Dude, pay yourself that day. Collect that money, because hold it, give it to someone, give it to your parents, let them have it, because you have the rest of the week to profit and benefit from, right? But it's good to always let it hit your bank account, have that wire hit in because that's when it's truly your money. You've taken it from the markets, you've secured that position. Now it's in your bank account, and then the US government can take their part. But point being is that it's not yours until it's hit your actual bank account. If it's sitting in your brokerage account, it's still in your brokerage account, buddy. You could still lose it on a
That's your
Tuesday.
broker's money.
The 2K that you made today, you could probably lose it tomorrow because you right and you want to get into the habit of taking the money out that you're making so that you understand the value of it, and that if you make $5,000 on a Tuesday, that it's not just 5K, dude. You've made more than people make in 2 months. Like, understand that, have that click for you.
Yeah.
So that next time, if your base average now is 5K a trade and you're up 2K, you're still willing to take it because you understand the value of it, because $2,000 in a single trade is a shit ton of money.
Yeah.
It's a shit ton of money. Dude, I have friends who make like $4,000 or $5,000 a month, and they're fine with it. They're content, and that's amazing for them because they love their life, right?
Yep.
But when I'm up, let's say I'm on a trade and I'm up 5K, I always need to keep that in mind because that's a monthly salary. I need to take profit. I can't get greedy. I must remain level-headed. The last thing I want to do is be up 5,000, get stopped out. Now I'm down 2K because I refuse to take profit because I got greedy.
Exactly.
Right? So you always have perspective of how you are doing. I know people who make $100,000 plus a week. I have very close friends who do very well, and they are the most level-headed. They always know the value of a dollar. $100 to these people is just as equally as valuable as 100,000 is. And these types of people are ones who haven't lost the value of what it means to have a dollar, and they're the ones who have achieved longevity in the markets. So if you're someone here who doesn't understand how valuable $1,000 trade is, or even a few $100s where you take profit, take it out, dude, you'll never achieve that long-term success.
Yeah, that's it. Somebody had a great question. Anybody know if the market is closing earlier on Friday? So yeah, because July 4th falls on a Saturday, observance for July 4th will be on Friday. So the US markets are going to be closed.
Yep.
What do we got? We got 2 minutes before the New York session opens. Hopefully we get a little bit of a spike here on the S&P 500 into that 74.75. I will be looking for a short-term short position given the right opportunity. Again, when we come up with these levels, these predetermined zones, level to level, we say, right? Well, guess what? If we don't get a reaction at our first level, we're not just jumping in blindly hoping for a reaction. We wait for confirmation.
Exactly. And someone said around, Kevin, can you bring that comment up? Around 40, 50, I was in sells, but after seeing your trade, I closed it. But now after hearing you, I again enter the sells and holding it with the same stops. Thanks for your insights, brother. Exactly. Dude, see, this is what I mean, right? If I'm in these buys here, I'm anticipating this. Someone else could be in sells and their positioning plays out better because obviously it's aligned with the bias, right? Overarching bias. And doesn't matter because it's a game of probabilities and their side of the probability just played out more. So I'm very glad that this person understood what I was saying, that, hey, if you're in a position, have that conviction in your play, because you know what would have happened is that if he was in this position and he closed it out because of what I said, he would have next trade been like, shit, man, I should have just held on to my own analysis, because at the end of the day, that's what's most important. It's your own analysis. I have my own edge, and that's how I got this entry, right? But RJ Forex over here has his own edge. That's how he took this entry. Like I was saying, I'm not looking for these sells. And I said, doesn't mean they can't play out. It's just that I rather have a better intraday positioning because I operate better in the markets at these types of trades. I know who I am as a trader, and the person I am as a trader isn't someone who's looking to take sells on the retest of here or the retest of here. I'm looking to take sells higher, but I'm very glad that it worked out for RJ, because there's always two sides of the coin, and the coin's only going to land on one side. It's always binary. It's either 0 or 1. Either my trade plays out or RJ's trade plays out. But guess what? Both of us are positioned from very advantageous price points. None of us are in sells or buys from the middle, hoping it'll go up, hoping it'll go down. We're very positioned RJ here could even set this to break even, that if the market comes back up, maybe it'll break up, but at least he'll be safe. And guess what? Same with me. My positions are at break even. So if RJ's plays out and I get stopped out at guess what? All I've lost is a few dollars on commission for my positions. And that's where the positioning is really beneficial. That if I'm in buys from here and the market comes down to here, it's not as optimal for me if I was down here. I have much more room to manage. I have much more room to remain level-headed. And then guess what? The market could reject here, head towards the upside, and then we continue to 40.70. But I had managed it correctly. RJ managed his correctly, and one of our probabilities played out, because that's all it is. It's a game of probabilities. The market's going to do what the market needs to do. Whether it consolidates for the rest of the session, we just ping pong between mine and RJ's trade, and then later on tomorrow we start moving, or whether we move now. The point being that if you're positioned correctly in the markets, there's nothing that can set you up for failure. Otherwise, is that you're destined for success. Whether you take a stop loss or whether you take a win, either way, you're going to come out a better trader, because you positioned yourself according to your plan that you had ahead of time. When you come to the markets while it's free falling and you don't have a plan, you are more likely to get seduced by the markets. You're more likely to get seduced by her. She's going to manipulate you. She's going to deceive you. She's going to lower your confidence if you let that happen. But when you come with a plan, you have higher confidence, you have higher conviction, you have a higher standard for yourself. My standard for myself is that I'm not looking to take sells if we break below 40.25 to ride the squeeze down. I much rather look to align myself on those better buys from these lows, or I much rather look to align myself on the shorts from up here, because that's my standard. And if you don't have a standard in life, man, I don't know what you want out of life. Like I have a very clear-cut standard. I have a standard for who my friends are. I have a standard of who I expect my girlfriend to be. I have a standard of who I expect myself to be. I have a standard of everybody around. I have a standard of who I expect Kevin to be while he's doing market in the morning. And Kevin has that same standard for me. Like I can't show up here sleepy and barely making sense and show up here confused. Kevin's standard is he wants to have a good stream that can get to 10,000 viewers concurrently on a live streaming event. And that's Kevin's standard. So if you don't have these standards in life, you're not living up to the potential that you could be living up to.
Guys, we come into these episodes just like every show is the first show.
Yeah, right? Yeah. So again, markets just opened just a few minutes ago. Yep. We talked about those setups on ES, how markets are bullish, but we'd love to see that retracement either at these lows or even down to here in my view. I know Kevin was talking about just from the lows, if we saw a bit of a sell-off down to there. So any sort of retracement down there, we could see some buying. But Kevin, do you want to share your screen?
For sure.
I'll be right back in just a few minutes. There's a few messages I have to answer for work.
Bro, do your thing. Your thing. Yeah, we're getting a lot of buying pressure right off the open here on the S&P. Held VWAP. We're moving higher. I'm taking a lab off for a second. You just wave when you're ready. So we're not going to be jumping the gun immediately, right? So like I said, I'm looking for this 74.75 for shorts, but I'm not just going to jump in as soon as price hits that level. So we're going to wait for the reaction and look for our entry. If we get our reaction, we're able to take our trade with our stop at that recent high. If we get a reaction, we're able to take that trade with an entry on the retest. If we don't get a reaction, then guess what? We're able to stay out of the market, let it play out, see it completely annihilate this predetermined level, and then we play it to the upside, and we let markets come to us and confirm to us the general direction. Right now, that was a really clean move into VWAP and hold. This is the S&P 500 right now. Here's gold is extremely range bound. I would be extremely careful trying to short when we're moving lower or trying to go long when we're moving higher. We see that the buyers fail just like the sellers fail. Oil, same deal. I'd possibly look for short-term bulls to take us near $71 a gallon on oil. This is S&P again right over here. We could take a look at NASDAQ also coming up near that key price level that I had marked out. I do like, you guys know me, I like those key psych levels. 29,800 is the next point that I would want to see NASDAQ start to react to. Right over here, 29,800. And as soon as we do come to that level, same situation. I'm not jumping in a trade just because price hits my level. I'm waiting for the confirmation off my level. Once those things start to play out, that's what really gives us the reasoning to take that trade. That on top of where our stop loss placement is, and everything falls into place. And you guys know me, I like that time frame analysis. Wait on the 15-minute time frame. I'll show you guys the 15-minute time frame here on ES. Right now, 8 minutes left, looking bullish, but we know 8 minutes is enough for it to reject this zone and try to close lower. 30-minute time frame as well has 23 minutes left, and hourly also has 23 minutes left too. Good reaction so far on the S&P. So what I'm going to look for is this entry for the shorts with stops near those highs. Let's see how this 5-minute wants to start to close. Can we close back below this zone? Look for a retrace to take these shorts and target lower. Something I note, like we went over before, this is the top of our range for the past week of trading. So I do want to look for those shorts. I want to be in a short position, trading with the range, trading with the general trend. And as much as we do want to see the Fed switch from hawkish to more dovish again, we haven't gotten that data. So I don't want to be so quick to be like, oh no, we're definitely bullish on ES yet. No, when the Fed turned hawkish, that's when all of this started dropping. This was NFP of June. I want to see how NFP of July comes out, right? How do markets take that information? Great reaction off that zone so far. NASDAQ also, look at that, man, tapped that. But we're staying patient, not jumping in, definitely not going short way down here. Wanted to see the reaction. We got a very strong reaction. So that is definitely, I don't want to say promising, but definitely helps give us the confirmation. So let's wait for a reaction, see if we can pull back somewhere. Could even pull up to the 1 minute. Say, okay, well, where are we? How are we closing? Do we have any retest points? The higher we get, the better for a short position. Could even look for people who trade fair value gaps, inverse fair value gaps. That would be an inverse right there. So it's like we could start a position and trade it lightly and keep your stop near the high, but just be very patient. I'm also a big fan of trading and using the VIX when I trade the S&P and NASDAQ, and I see the VIX had a very strong spike higher too. A higher VIX usually leads to higher volatility and lower S&P and NASDAQ price levels. So you could take a very small stab at some shorts, stops near the highs. That's what I'm looking at right now on the S&P to trade this back lower. A nice strong confirmation too on these shorts, if you don't like these sells right away, would be to see how this 5-minute closes and wait for a retest to push lower. Or we can also look at that NASDAQ dropping. Beautiful. We can look for one more break lower right here. We see that now, you guys remember the last lesson, one of the last lessons of Market in the Morning, where I mentioned all of these stop losses down here as low-hanging fruit. Well, look at how many there are, right? We could line all these up. So many lows, right? Liquidity levels that need to be taken out on the S&P. So let's wait and see. We have 40 seconds left in this 5-minute, and that's really going to give us some insight into where our entry becomes. Is it somewhere over here? Is it somewhere up here on a retest? Or are we going to have to be even more patient and possibly wait for that 15-minute time frame to close too? So be very patient. If you're not in any trades yet, best advice is to just wait. If you don't see your trade, you don't have your edge, you don't have a trade set up to take. If you have an edge, you have your entry, great, take it, have a proper stop loss, have your stop loss be wherever your analysis is incorrect, and you're able to take that trade with confidence. If you're not doing that, you're just jumping in randomly, then you're going to have a bad time. We do have some pretty heavy volume coming in, but we do have a positive exposure right there. So let's just see. I'd like to see how this 15 closes. Again, ideally, this 5-minute did close back higher, so I'm not the biggest fan of that. Really, in my opinion, it's just a wait and see how this 15-minute wants to close. We have 4 minutes on that. We could be patient. Markets are open New York session-wise for 6.5 hours. Nobody's telling you have to trade within the first 5 minutes, within the first 15 minutes. If that's not when you feel you have your best execution, then that's not when you should be trading. See buyers trying to retest this supply area one more time. Now, again, I want to see, can we pull back to this area and reject again? Is our entry on S&P shorts a retest of this supply zone? Or do we blast right through, buyers hold us, and guess what? If that's the case too, we're ready for that as well. We blast through the supply, we use support, resistance as support, we're able to play it from there. Nil's back on the scene, man. What's going on, Nil?
What's up? What's up, Kev?
Long time no see.
Man, it's been a long time, bro. Let's jump right into
Yeah, let's jump right into it, bro. What levels are you watching today?
Man, I'm still in these gold buys, dude. Either it plays out for RJ or it plays out for me. Sorry, RJ, but I hope it plays out for me, man.
There we go. There we go.
Yeah, I agree with what you were saying. I was listening to what you were mentioning for ES.
Yeah, would love even a short-term
wait and see for it right now, man. It's especially when it's around areas like this. We don't want to jump too fast into anything. We want to wait for positioning.
Yep, exactly. Let that 15 close. Some people trade a whole strategy that requires them to wait for that 15-minute candle to open, close, break. Like that takes time, right? Trade setups are not going to come to you as soon as markets open. Sometimes that does happen, but we don't want to be forcing that. We don't want to keep our expectations that high of the market that, oh, markets are open, I'm trading, I need to be making money. No, you know?
100%.
Take a look at the NASDAQ, see what NQ is doing right here. Let's see. ES still trying to reject. I do like this retest and rejection again of this supply area, which would give us a pretty nice entry. NASDAQ still trying to hold, though we do have some more upside on NASDAQ, in my opinion, towards that 29,800. Ideally, I really would like to see this weighted index chart start to drop. VIX did drop to the downside, though. New low of day on VIX with new high of day on ES. If that happens, we'll confirm more of a bull trend. So be very careful there. Could see some more upside here on the ES. 2 minutes left in this 5 minute. Just stay patient. If you're not in a trade yet, we know we're waiting. Crude oil, also very range bound. Tried to move to 70.30, back down to $70 even. Let's see. Gold, very choppy. I mentioned be careful shorting gold near lows as we've been pulling back, just like going long on gold near highs. We've been pulling back. Not the cleanest of trends that we have been seeing.
Yeah.
S&P got a minute 37 left here on the 15 minute. So that minute 30 is really going to give me insight into, okay, are we going more bullish today, or do we trade back lower and trade back to the bottom of that range? Minute 24 left here. You know, that's plenty of time for the markets to do anything, so be prepared. I do think we're going to try to break through to the upside. So like I mentioned, if you're not in anything, don't take anything right now. Let that confirmation, let those sellers prove that they are taking control if you are looking for a short position on the S&P and NASDAQ. Got to remember, buyers have been in control since the beginning of Friday, but overall since Tuesday, this is the high of the range. So we're at that bit of a rock and a hard place situation in the market where buyers are trying their best to squeeze us higher. Sellers are trying their best to hold us at the bottom of the range, but there go those buyers trying to squeeze it. So let's just wait and see how markets want to play.
Agree. Yeah.
You know, very, very tough point right here.
Yeah. It's the start of the week, right?
Yeah.
Start of the week, exercise some patience, and we're going to be rewarded when those better opportunities come.
That's right. That's absolutely right. But if you're not exercising that patience, you jump in a trade down here, you get stopped out. You jump into a trade again over here, you get stopped out. Like, don't do that. Don't go chasing the market. Don't be thinking that you're definitely right. Like, oh, these shorts are definitely right. No, if it stops you out, you weren't right. Your analysis was wrong. You stop out, you move on with your day, you find your next trade setup.
100%.
Extremely strong close there on ES and NQ.
Yeah, just be careful of like that 7,500 area.
Yep.
I would honestly, I would have loved to see a pullback to like 74.30s, 73.60s, 70s before we saw buyers jump in. So if we can get some sort of like sellers to drive price down to there, maybe. But if that area gets taken out, like it's then we're gonna just continue pushing towards the upside.
Yeah. Are you still in any trades on gold?
Yeah, I'm still holding the gold buys from 30, 40, 30 on my screen. I just
Okay.
have that at break even, and I'm currently up. It's up 90 points right now, 90 pips.
Get you. Got you.
So just from here, from 7:30 a.m., it's a slow. This one's just either going to be break even for me or it's a profit for me. Like there's no loss involved in this, and I'll happily take this break even though this took like a 3-hour trade. To me, that's fine. Like there's been times where I've held positions for 2 days and I've taken a break even. So this is like 3 hours break even, perfect. I can move on, do something else. you know.
Yep. Of
So
course.
but here's the thing: if we don't break 40.25, then we might see a leg. But if we break 40.25, that squeeze is going to come down to near these lows. And if I was Arger, if anybody in from 40.50s, that's a clear passage for you to hold. Breaks of 40.25, look to hold into this lower price handles over here.
Yep. NASDAQ off that 29,800.
Yep. NASDAQ off that 29,800. Yep.
Just waiting right now. We know buyers have control, not forcing anything. Psychology and greed, man. That's it. Greed is the killer of good traders.
Yeah, greed is a killer of good traders. That's very true.
You could think you're the best.
It's one of the 7 deadly sins, right?
Yeah, that's right. And it is for a reason.
Yeah.
Let's see. Where's our SpaceX trading at? SpaceX trading back at 158 right now.
Do you want to share your screen, Kevin? I gotta head out in just like a few minutes, actually.
Yeah, bro. Go do your thing.
I'll stay on for just a few minutes while you're sharing the space.
For sure. Let's check over on SpaceX right now. See what's going on there. Let's see. SpaceX bottom right over here. We're going to share screen a bit larger. Now, guys, my analysis on SpaceX, I wanted to see it come back towards that $200 mark, sort of one last liquidity grab before it does make a run to the downside. Google also just soaring above its previous day's high. Show you guys the equity chart I'm looking at. Here's Google above its previous day's high. We have Meta above previous day high and still bullish. A lot of strength in equities, right? So this would be another red flag for anybody trying to take a short position right now on the S&P and NASDAQ.
Yeah.
Let's see. ES holding very well. I do like this 74.80 on ES was a resistance point. Now becomes, again, support. Just a matter of staying patient. I'm not a fan of buying in these big zones that I marked out, right? That's my edge. Everybody trades a different edge. I'd want to be extra patient here. And like Nil mentioned, it's Monday. No reason to be jumping the gun on anything. And guys, don't forget, we got that NFP webinar this Thursday.
Yes, sir. Make sure you guys come join us. We are going to be doing some giveaways. We're going to be giving some value, some physical giveaways. And it's going to be a good time, man. You're going to be trading NFP with professionals. You're going to have guidance in the markets, and that's priceless.
That's huge. What more do you need?
Yeah. Amazing. Kevin, I got to jump off, but yes, I'll see you tomorrow on another fantastic stream. Thank you so much for hosting this. Thank you guys for joining. I'll catch you guys tomorrow, but
absolutely, bro. Have a great day. See you tomorrow.
Bye.
Later. All right, guys, let's be patient here. I'm liking this area, the 74.80, like I mentioned on the S&P, for possible longs, possible, not probable. So bit of a difference in a sense that we don't know if it's going to hold, right? We know this is a resistance area. We also know that this is now a new support area. So jumping the gun too early, all that leads to is multiple paper cuts, multiple losses that should be avoided, right? If we know that there's a possible loss coming in the market, or if I'm thinking of going long here, but I have all these other signs telling me this is a short area, well, then guess what? You're either not taking any trades or you're being a bit more patient. Look at those sellers are getting ready to dump it, man. They've been ready. They've just been waiting for their entry. Got our 30-minute time frame. Got 10 minutes left there. Let's just wait. Let markets do their thing. Gold trying to move on back lower as well. Can protect yourself if you're any longs. Take profit if you're in any shorts on the moves. Let's take a look at gold here for a moment. and see. Let's check the hourly time frame. Where are we? Right? Oh, that's a nice rejection right here on gold. Take a look at this. So basing, we have our small body, longer upper wick, sellers took control. Everybody that was a buyer within this last hourly time frame right here, what happened to them? They just got wrecked. They're in a losing position right now. So next time we pull into the zone, they want to exit their position for break even, which means guess what? If they were buying up here and they want to exit for break even, they have to become sellers again up here. So possible short entry on a pullback to that zone. We see a lot of selling pressure in that area. Look at that NASDAQ and ES spiking again, but really lacking the proper follow through, the proper continuation, right? We're having green candle, red candle, green candle, red candle. Sellers step in, boom, it's strong, but then buyers step in right back with even more strength. These are very choppy market conditions. It is Monday. Market makers, institutions are anticipating non-farm payroll. They might want to move price to a better point, whatever the case may be. S&P, really, I'd really like to see weakness, but guess what? If we don't see weakness, I don't see a trade. That's it. That is it, man. 74.90 does show a strong seller on the S&P 500. 74.90 up here. Let's see. Get rid of that. So 74.90. NASDAQ already blew through its strong passive seller of 29,800. So those sell positions have already tried to enter the market, and buyers have already proven that they are not giving up without a fight. So we really don't want to be fighting this trend yet until we see strength. Now, if we do just break out and continue, then guess what? We're in a good position to have targets to the upside. But we do not want to just be jumping in randomly here, because guess what would have happened if you jumped in randomly long right at the end of this candle? Would have moved higher. You would have thought, oh my God, I knew it. We're making money. And then from 74.87, it dropped down to 74.74. That is a 12 to 13 point drop in a matter of 5 minutes on the S&P 500. For those who don't trade the S&P, that's a very strong move in a short amount of time. Wow, look at this, guys. Bitcoin back below 60,000. Let me know if anybody here is invested in crypto. What's your favorite crypto asset? Me personally, I am a Bitcoin fan, not an investor in it at the moment, but I do love where it's at that $59,000 mark. That is a phenomenal entry point if Bitcoin does eventually make its way back to those all-time highs, even if it takes a year, it takes 2 years. That ROI, which is what we look for when it comes to trading and investments, is going to be very strong. Look at this, man. Look at these buyers are not giving up. Bitcoin fan here. Nice, nice. Are you in any Bitcoin? Are you an early investor? Let's see. Oil, still very range bound. These are just overall choppy markets, right? If you're not being forced to trade, which, let me be real with you guys, nobody here is being forced to trade, then you shouldn't be taking any trades. These are extremely great examples of non-trading market conditions. 30 minutes still closes in 6 minutes, which we know is plenty of time for it to move back below this supply zone again. If we do happen to find strong selling pressure, am I against shorts? No. But am I just going to jump in at the first sign of selling? Absolutely not, or else we would have caught 40 paper cuts. Gold continuing lower from this area. If anything, we're waiting for the hourly to close here on gold and looking to see if we could pull back somewhere and take a short on gold. I do like, me personally, I like some shorts on gold to possibly look to target this next purple zone, right? We go level to level. This would be my next level of interest on gold for a short position. So here we go. This is what I'd look for on gold. See if we could pull back somewhere over there. 40.50 on GC, and that would be on XAU USD. That would be right over here, around 40.40. So looking for a nice break and push lower on gold. We see S&P again really trying to reject, but do I really want to just jump in random shorts? Absolutely not. Do I think they're random? No, I think we're still rejecting this zone, this area that I was looking for originally. But at this point, with 4 minutes left in the 30-minute time frame, guess what we can do, guys? We can wait. We could sit on our hands. We could be patient. We could let markets come to us versus forcing markets to look like they're in our favor. Let's see. Great reaction there. That's what I like to see. Beautiful. Come on, man. But remember, guys, look at this. Over 4 minutes left in this 5-minute candle. That's plenty of time for it to do anything it wants. Drop, pop, stop, whatever it wants to do. Can you check the VIX? Yeah, so here's the VIX. The volatility index is currently moving higher off of some lows. We haven't made new high of day yet on the VIX, but it is moving higher. Not the strongest of moves, but it is showing us some momentum. Again, I'm a bigger fan of looking at equities and the weighted index, and we do see the weighted index is finding some weakness here, same as NASDAQ. Look at that great rejection off of that 29,800 on NQ. It pumped up to 29,840, and then it has dropped since then 170 points. Look at that huge reaction right there. That's great. So listen, man, it's not like when you look at these markets and you go, oh, well, I was looking for shorts up here, I missed the move. No, because before, guess what? If you tried to take this trade, you would have been stopped out. Tried to take this trade, you would have been stopped out. You didn't miss any moves. Let the market prove to you that this is the actual move we're seeing. Up until right now, the moves have still been bullish. The buyers have been able to take control of these dip opportunities. So be patient. Don't jump the gun down here if you're not already in a short from up here. Let gold pull back. Let S&P pull back. Yo, I got you. Absolutely. I got taken out of break even at 40.30. Let's see if we can get one more entry later on. Are you looking for shorts or longs on gold? Guys, let me know what you're trading right now. Are you long? Are you short? Are you in gold, S&P, NASDAQ? What is it that you're trading today? That's a crazy drop from that area, man. Nice move. Nice move. 15-minute time frame. I didn't even realize the 15-minute here was in longs. All right, I got you. 15-minute here. Great reaction. We had our 15-minute high break. We're pushing back towards that 15-minute low. That would be the orb, like some people call it and some people trade. Here's some more selling pressure. 30-minute time frame. Wow, pushed bearish on the NASDAQ. We have 2 minutes left. Ideally, I would actually like to see this 30-minute close a bit more bullish, where it's a small bullish candle, longer upper wick, showing me that all of these buyers that bought off the first 30 minutes of the market open are now trapped in a losing position to drive price lower from there. So that, again, is ideally what I'm looking for on the S&P and NASDAQ right now. Minute 40 left. We're going to wait and see that play out. A lot of good selling pressure. Let's just wait. Don't go short at these lows. Currently looming for long to catch deeper pullbacks, leading to price setting up for better sell zones, lower my risk. Got you. And that's on gold. You're looking for a pullback? Yeah, same here. A nice gold pullback would be great. You get that positioned on my own side over here. We'd be looking for 40.50 or 40.40 on XAU USD. Great sellers down here at the 74.60 mark. Let's wait. Look at this weighted index showing resistance. I love the selling pressure we're seeing. This is the confirmation that we have been waiting on for the S&P and NASDAQ. Now becomes the question of where is our entry, where is our exit, and our stop loss. And again, because we're waiting on that 30 minutes to close in our favor, we have 30 seconds left. I'm not going to jump in because I can't wait 30 seconds. We just waited 30 minutes. See that? You jumped in because of 30 seconds. You would have stopped you out and then possibly moved in your favor. Patience is a virtue when it comes to trading. So 20 seconds here. We're trying to hold this purple zone from overnight. This has been a session that buyers have held once, twice, 3 times. And now right now with 9 seconds left, let's see where we hold. If we close within the zone, gives me stronger confirmation. I'll look for those shorts. If not, I'm going to have to be a little extra patient. But take a look at the 30. Did it close how we were looking for? It did close. Small green body, longer lower wick. It looks good on the sells. If we can break this low on NASDAQ, I'd consider some shorts off of a very strong reaction. There we go. Getting a big drop right there. Around 25 could be stop loss, 625 stop loss on NQ shorts. Just looking for this reaction to play out to the downside. And if it does pull back, stop out, then we just look for a re-entry. I do like the momentum we're seeing. VIX is at a key level, though. I'm not a big fan of VIX at a key level. That's always an area that price can react to and pull back. So just be patient. Let markets play out. I love the selling pressure we're seeing off of the zone. We're below VWAP. We had a little bear flag form. Nice drop. There's some continuation there. Beautiful. Seeing some buying pressure. Staying patient. Let's just do it. Let's do it. Let's see. I'd like to see NAS try to hold below 29, about 630 over here, right above VWAP. Would love to see NAS try to hold below VWAP over here. If it retests it, great, possible re-entry. But right now, let's see. Here comes a big buyer. If this does hold, I will look to add on this pullback. Let's take a look at our equities. Equities are trying to hold a bit more bearish, sort of pulling back. Nvidia's pulling back, but at a lot more selling pressure. SpaceX is pulling back to the downside, which is phenomenal, but pretty choppy right here. Pretty choppy on our equity side. Let's see. Look at this. 10 seconds left in this 1 minute, and I love that we did just have a buyer try to bring price higher, and they failed. So could keep stop loss near that 615. See if we have some follow through here, even just to target new low of day. We just made a new low of day 2 minutes ago on the NASDAQ. So that could be first take profit. Again, looking for us to pull back towards 29,284. It's another 300 points on NQ. As big of a move that sounds, we've been getting huge moves on NASDAQ and S&P. So it's not unheard of. It's not unlikely. And remember all the lower lows, all the higher lows that we have to sweep through on the S&P and NASDAQ as well. So just really waiting for that follow through. I'm a big fan of trading off the 5 minute versus the 1 minute. So we'll keep an eye on that 5 minute there. We have 2 minutes left on the 5. We did sweep this low just before. We are struggling to break it again. So a little concerning there, but nothing major that would tell me, oh, well, you should get out of this trade now. We've been making lower lows. We've been making lower highs. Sellers have control at the moment of these markets, and they want to be in the trend. And remember, this was the top of our range. I was mentioning that in our pre-market. That was off our pre-market analysis right there. Could have definitely had a better entry up here with the rejection, but I did not, unfortunately, and it happens. All about readjusting, right? These buyers ain't giving up, man. We have 1:32 left in the 5 minute here. Buyers ain't giving up. Sellers ain't giving up. I got to see NVIDIA start dropping. If NVIDIA gets back below 193, we should be in for a strong run to the downside on the NASDAQ. If not, we're going to be a bit more range bound. Might even find our way back towards this high again. 1:08. Want to see some follow through. If we get a strong close below this 29,557 on NASDAQ, that would be great. Look at that drop on gold. Great shorts on gold. I'm not in them right now myself. Did not give us the pullback entry. I'm in those NASDAQ shorts that we mentioned before. 50 seconds left here. Just a matter of being patient and seeing if we can have some follow through. 15-minute time frame. Pretty wicky. Take a look at that. Pretty choppy here on the 15. NASDAQ broke 15-minute low. ES did not break 15-minute low off the original 15-minute opening range breakout. Some more sellers at these lows gives me confidence that sellers are trying to bring price lower or at least to the bottom of the range. We haven't been in a market that's been giving us trends and pullback entries. We've been in a market that sort of moves higher, rejects supply, comes to demand, rejects demand. So I want to see a strong close below this white level. If we don't get that, I'll probably look to exit some of this contract here. But we are getting that close, so that's great. Let's see if we get a little follow through here. Nice drop there on the NASDAQ, ladies and gentlemen. Beautiful, beautiful. Give us one more quick little run. Take some profits off the table, get out into some strength. Out of a few there. Great trade, great move. Just letting them hang on this trade, guys. Nice little move there. If you're in profits, you're happy with the profits you see, take them. Don't be so quick to hold a trade. If you're in a good profit, you're in a good move. I do want to see some continuation on the NASDAQ here. Nvidia's dropping. Apple's weak. Equities are weak right now. Have some follow through on the NASDAQ would be great. VIX is at a key level. A little concerning there, but VIX is new high of day with ES trying to push towards new low of day. That's that confirmation on the shorts. We had a great reaction off of that supply area we had mentioned earlier. Bang, another drop on the NASDAQ. Let me mark out some of those pivots. These pivots are areas that should be seen as take profit levels. So even right over here, I still want to see NASDAQ continue its way lower. Just had some buyers step in, but I want to see those buyers fail. Every time, ever since 950, buyers would try and fail. Before that, sellers would try and fail. So right now, we know sellers are in control off of this area of resistance, off of those levels that we had marked out from our pre-market. So it's really a no stress type of environment because we waited for the confirmation. We let markets react to the zones that we had marked out originally. ES holding lower. Want to see that NASDAQ drop. NVIDIA back below 193. That's exactly what I was looking for more continuation to the downside. My biggest issue at the moment is the VIX at that key level. But look at that, guys. Another drop on NASDAQ here. Get below 29,500. Bang, below 29,500, ladies and gentlemen. What a great trade here. You guys caught that here on market in the morning. What more can I say? Oh, wow. Great move. Great move. I'm still holding at the moment. Definitely considering getting out into some strength down here, but I would love to see some more follow through. Trend is our friend. We want to see markets play through, and we want to be able to let our winners run. VIX is at that key level, though. Equities showing a little bit of support here. NVIDIA is still very weak. Trying to let this winner run, but I do like the profits that we're seeing here, so I'm probably going to look to cut this trade if we get one more little dip. If we don't, I'll probably look to just manually exit. Let's see. Me personally, at least. You guys can hold it. If you guys still have confidence in this trade, go for it. Bang! Look at that. Okay. Keep going then, NASDAQ. I didn't exit. I didn't hear no bell. Keep going. Drop it like it's hot, man. You guys are catching this whole move here on market. I'm getting out there into some strength. Beautiful move on NASDAQ. I do think we're going to still have some follow through. This was from our entry. 150-point move there on NASDAQ. I gave you guys the zone up here around 20. I gave you guys the level 29,800 before. We're at 350 points below that level. Fantastic, fantastic price level. Great call out. Good patience. Could have possibly looked to enter off of this 5-minute, but you guys remember at that point we were waiting for the 30 minutes of close to give us confirmation, and that's absolutely fine. Nice. There we go, Mohammed. 1% profit on NQ. Guys, that's pretty big, man. 1% on your account is beautiful. Beautiful. Guys, make sure you run that like button up, man. Nobody does it better than market in the morning. Damn, even gold shorts played out very well, still continuing. I told you guys, looking at that hourly, it was getting ready to continue lower, and it did exactly that. Great price levels, great call outs. Hope you guys are banking today too. Really good moves. VIX continuing higher, confirming this downtrend on the S&P and NASDAQ. I'm happy with my little exit down here for now, but I do think we're going to continue lower. Now, I mentioned before, I'm a big fan of the 5-minute, not a big fan of the 1-minute when it comes to trading, but the 1-minute will still give us an idea of the momentum we have versus if we start to consolidate. Guys, let me know in the comments, what is your favorite time frame to trade off of? Do you trade off the 5-minute, the 1-minute, the 15-minute, the hourly? What time frame do you trade off of? And what time frame do you get your levels off of? Good work there, ladies and gentlemen. Probably even look. Let's see. 14 seconds left here. In my opinion, I think we continue lower. And these sellers just end up trapping the buyers again. 15-minute entry. Good job. Let's go, man. Good work. Good work. ES starting to take out those lows. That's why I feel like there's more of a chance that we do end up continuing lower from here. But remember, 5 minutes, we're going to pull back. We could always see pullbacks. I am looking for a possible re-entry on the shorts. Let's see. Yeah, I mean, I think we see some clean continuation. NVIDIA getting ready to continue the dump here as well. There goes NASDAQ with a big seller entering the market. If you do re-enter, stops around, what's that, 500. Nice little re-entry so far. Gave us a quick move. See some follow through here. Nice. Guys, look at that. Re-entry for a nice quick little scalp of 20, 30 points on NASDAQ. Come on now. Who's doing it better than market? Who's doing it better than market for you guys, man? Don't forget to run that like button up. We shoot for 50 likes per stream. I don't even know what we're at right now, but if we're not at it, I'm beat you guys up. But great stuff. Great work, ladies and gentlemen. Really love to see it. Let's see. Yeah, YouTube guys, 42 likes. Love you guys. Show some love. Smash that like button. Absolutely killer Monday right now. Look at that. Gold continuing its drop. Man, what a beautiful move. We got beautiful drops on gold, beautiful drops on NASDAQ and the S&P, and we had those levels in the pre-market. I can't emphasize enough the importance of creating routine and structure. If you want to be consistent in the market, you have to have routine. Routine builds consistency. Consistency is built with structure. Everything comes hand in hand. NASDAQ just continuing lower. I mentioned my original price target on NASDAQ is the open price at 29,280. That's another 100 and so points away. More than 100 points away. Really nice work, guys. Really nice work. Don't forget, follow us on Instagram is marketai.insights. Join us for the NFP webinar. Another drop incoming right here on NQ. That is huge. Look at that momentum we're seeing, man. NASDAQ's in a free fall right now. I don't know if you guys saw, there's this woman used a whiteboard and she was drawing candles and she drew one on top of another instead of next to each other. And it was really funny. People were making memes about it. Like, the market doesn't move like this. What are you talking about? And then the next day, markets literally just gave us a straight down move. People were like, oh my God, she's a quant. But listen, have fun in the market. Enjoy what you do. If you enjoy what you do, you'll be that much better at what you do. I'm out for the rest of the day. Got more than what I was looking for. Thanks. Yo, let's go, baby. Yes, sir. And Sean, yo, look at you, man. In gold shorts 40.35. On XAU USD 40.35, because that's a beautiful entry up there, man. Look at that NASDAQ continuing, man. ES wiping out all of those lows that we mentioned before. This is phenomenal. Really clean move there. Could look to scalp this for some momentum, as we see the momentum is there, but we do not want to be the ones that sell lows. As much as we do want to be in a short position, I'm in and out of those trades. I'm good. I got to start initiating that hold for 10-minute trade setup myself, trade rule, I should say. I have a rule where if I take a loss, I have to wait 10 minutes, because what happens then is, let's say you take a loss in trading, right? The only reason you take a loss is for two reasons. You were either completely wrong on direction, or you were possibly too early on your entry. And guess what? That's going to be answered if you wait 5 to 10 minutes, if you're trading on that 5-minute time frame, or even 15-minute time frame, because then you're letting markets develop a little further to then say, okay, it looks like, let's say we were going short on ES over here. I was too early. Okay, but boom, here we are rejecting again. And now NASDAQ's over here again. Great. This is a lot more high probability than this original trade. Great. You take that, you waited the 5-10 minutes, you took 2 trades. Your second trade completely surpasses the loss of your first trade, and you're done for the day. I'm out of gold. Awesome sell. Dude, let's go, baby. That's what I'm talking about. Gold shorts were a nice move off that 1 hour. Nas seeing a little bit of buying here at the lows. Obviously, just some profit taking. Guys, we're a couple likes away from 50. I know we're not being shy here. Let's run that. Let's keep that going. It is 10:14 right now, and we have absolutely crushed the NASDAQ. Love to see it. Really good work there, ladies and gentlemen. Bang, another drop on NQ. These sellers mean business right now, man. No joke. No joke. I'm not selling these lows, but wow. Wow, wow, wow. Let's see. VIX is flying. Again, this was a nice confirmation. Only reason, and what sucks here is I got out of the VIX because it was at a key level. So I was worried for a reversal, but that VIX flying with strength was a lot stronger than that VIX key level we were at. ES, NASDAQ seeing buying, and then those buyers just get absorbed and those sellers take control. There's a lot of aggressive selling pressure in these markets right now. We want to be patient. Here's the bang. Look at that. That's the price target. That was our original target. 20. Wow. Look at that reaction of the target, man. 29,280. We just popped from 29,280 to 29,340 in a matter of a minute there. That's a 50-point wick on the NASDAQ, guys. That is a massive, massive move. If you're trading this, 70 points now. If you're trading this, you're trading with micros. If you're trading futures, you're trading 0.01 possibly if you're trading Forex. Wow, what a pullback. See if we get a good, see if we get a better sell opportunity. I still think ES has some more ways to go to the downside too. So I might even take a look at ES here and see if we have any pullback levels on the S&P 500. We're pulling back into a pullback area right now, a bit of a low volume shelf on our volume profile. So let's just wait and see the reaction here. It's exactly what I'm talking about. See if we get some shorts. Let's see. Let's see. Now remember, sellers have had extreme strength. So the sells have a lot of a higher chance of working out than the buys right now. Even if you just sell any little pullback we see. Very nice. There we go. Continuation off of that low volume area that I mentioned. Let's see if we could break that recent low we were just at for first take profit. Would love to see that. But we are trying to hold NASDAQ's at support. Yes, swept all of those lows from the pre-market. It does. Nope. Yeah, it swept all those lows from the overnight. So be careful. We could see a little bit of a bullish reaction here. I would be a bit more patient than I would be to jump in a trade. But if I am getting in a trade, or if I were you and I was looking for a trade, I'd still be looking to take those shorts versus the longs. But remember, we already had a very strong move on both equities, ES and NQ, and also gold. You know, we had a very strong move on gold. Just a matter of being patient. 1047 gold is pulling back. I wanted to see the S&P return to 73.80 though. 73.80. I got a lot of positioning down there. That was our low of our range on Friday. Let's take a look at Friday. Friday's low is 73.80s to 73.60s. So I want to see us just pull back to the bottom of that range again. Take a look at our equities. NVIDIA's in free fall mode right now, which is great to see. Rest of the equities, so is Apple's trying to get more bearish as well. SpaceX is very bearish here too. We are near those lows. We're seeing a bit of a reaction. I do think there's a lot of profit taking going on here, but remember, sellers have had good control of these markets. So we'd rather be short than long. Nice little moves there. Nice moves. Gold tapped 4,000. Yeah, look at that. Gold tapped 4,000, guys. XAU USD 4,000 even was tapped and retraced from. So very strong move. I'd still be looking at the hourly on gold and still be saying, look, we have 40 minutes left here. And gold has already proven it is trying to hold bearish. Imagine we got a pullback all the way to this zone during this hourly candle and we still had 20 minutes left. If that was the case, we pull back to this point in the next 15, 20 minutes and we find a reaction. I'm looking for lower highs, lower lows, lower low, lower high. Boom, bring us right back to lower low again. So I'm definitely all for gold pulling back. I want to see an entry for the shorts. ESNQ pulling back from those lows as well. NASDAQ was at a key level. ES is at a key area, swept all those lows. Just wait and see. Wait and see. Beautiful move. You guys keep running that like button up. Absolutely love to see it. Great trades here. Great call outs. Great setups. We always got to mention NFA, not financial advice, but great trading advice. Great trading information, knowledge. Knowledge is power. We want you guys to be able to execute accordingly due to what we're giving you guys here for free on the market in the morning streams. Supreme Court expands presidential power to dismiss senior officials. Ooh, Landmark ruling sets presidents fire senior officials, threatens Fed and agency independence. Yo, for real? Are we for real right now? Oh, no, but wait. Court expands presidential power, but then we have this one saying U.S. Supreme Court declines to let Trump remove Federal Reserve Governor Lisa Cook. Okay, so that's one. Supreme Court backs Trump's firing of Federal Reserve Commission members. Backing on Trump's independent agency firing expands presidential control and raises Fed independence fears. That is not good for the markets. The Fed should be very independent. Gold, come on, give us a pullback on gold. That would be phenomenal. And look at that, another little spike up. ESNQ, anything going on there? Just a whole lot of chop. We do have a key area, sort of that fair value, that low volume shelf here on gold, on NASDAQ and the S&P. If sellers do want to continue, this would be a nice little pullback entry, right? If we're seeing a strong move to the downside, we want to sell the pullbacks versus just selling the lows. I would be a little extra patient. I wouldn't jump the gun so quick. We're trying to reject off of, I'll show you what I'm looking at, this 29,400, and stops would be around 29,450. So about a 50-point stop loss there for shorts to take us to new low of day. Show you guys what equities are doing right now. Equities are currently pulling back, so all of them have turned green on this candle. Meta, Microsoft, Google, even Nvidia has. So again, one of the main reasons I'm not so quick to jump in these shorts again is because equities are trying to hold. When equities try to hold, I want to stay out of shorts. If equity starts to run into a standstill, then yeah, sure, I'm all for it. Take some shorts. But right now, we just want to wait. Just want to wait. Like I mentioned before, guys, markets have not been giving us strong moves, pullbacks, pullback entry, and then continuation. It's been giving us strong moves and then strong reversals. But let's see. I'll let you guys know if I do end up taking a trade here off the NASDAQ. Again, I'm not liking the way that we're holding in this zone right now, so we're most likely not taking this trade. Volatility index, the VIX, is also pulling back. Oil, extremely range bound. Very happy we left those markets alone today. Gold pulling back. That is phenomenal. What price point are you looking for on XAU USD? I'm looking for 40.40. 40.40 on XAU USD. 40.50 on GC. There we go. That's a bit of a reaction I like to see. That's exactly the reaction I want to see. So let's see if we can find a little bit of a short opportunity here for continuation. Now remember, we're looking for a continuation trade, so we're not looking for something that, oh wow, why am I looking for a short position in a bull market? No, I'm looking for a continuation trade here. So let's see if we do want to try to start to hold. Nvidia just got very weak too. So again, giving me confirmation on these shorts. If you are taking more trades though at this point, and you already took those original shorts, you want to size down. You don't want to give profit back to the market. Size down, because guess what? If it's a winning trade, it'll still put profits in your pocket. But if it's a losing trade, you don't want to give back the profits you already have. Nice reaction there. Good seller here. If we do get back below this 60, that would be great confirmation on these shorts. Great. There's back below 50. That's what I like to see. Can we get a little continuation here? Nvidia's back weak again. Google's weak again. Apple selling off. SpaceX is weak. I mean, it's a lot of selling pressure, undeniable selling pressure in our equities right now. That headline was definitely a little bit of a scare for the markets. You know, the president's ability to separate the Fed's independence. That is not good. Why specifically 40.40? Great question. Let me just manage this trade real quick. But 40.50, so 40.40, 40.50, it's because of the hourly time frame. That was the last point that we created a lower high before we pushed lower and created some lower lows. So that's why I like 40.40. NASDAQ again trying to hold. This is why I mentioned size down if you take any trades here. Pulling back into that low volume area, but I do think buyers at this point will try their best to bring us higher from here. Be very patient, be very careful. If you're not in a trade, don't take it. If you already took some winning trades, you're good for the day, man. Call it a day. Nobody's telling you got to keep chasing every trade or taking every trade you see. Just be patient. S&P 500 still also very range bound. I would almost look to see this as a reversal pattern, seeing that that's what the markets have been doing lately. They've been dropping, popping, or popping and then dropping. They have been very rarely giving us a good pullback or contest area. S&P looks okay, but again, it's pulling back very strong. VIX is coming to that key level. If VIX could turn around here, that would be great. Take a look at NVIDIA. NVIDIA was trying to go weak this last 5 minute, and then for the last minute of the 5, it spiked back up and pushed green. So when I see strength in equities, Google's pushing higher, Meta's pushing higher, Microsoft's pushing higher, NVIDIA's pushing higher, I do not want to be short. But that's why 40/40 on gold, GC. Let's see. And also something else to mention. We have the hourly time frame we were trading, right? If this hourly does pull back to this zone, flips green on this current hourly time frame, but still has 30 minutes left. Go over this all the time. 30 minutes is plenty of time for markets to move back lower again. All it needed was 15 minutes to originally get this big move to the downside. So possible pullback, we will see. Bang, pushed right through that trade on NASDAQ. ES still pulling back near an area of resistance. VIX at an area of resistance. Weighted index down here is starting to reject too. So we do have a lot lining up at this level. Some equities are showing some weakness, but I don't want to be so quick to jump the gun. I mentioned before, and I'll say it again, that in these types of market conditions, we're not really getting pullback and continuation trades. We're getting drops and reversals or pops and reversals. Even this one over here moved higher, dropped again. Hey, appreciate that, man. Yes, sir. Yeah, great call on S&P and NASDAQ. That's why I like trading both of them. It definitely depends on which one you're trading and which one has the best opportunity that day. NVIDIA is still trying to push higher. Apple pushing lower. Got to get NVIDIA back to the downside. That would be huge. But NVIDIA is trying its best to hold up at this 192 area. So we're just waiting. I can't take short without NVIDIA showing some weakness. That's one of my rules myself. If NVIDIA is showing strength, why would I want to be short ES and NQ? Weighted index really showing some weakness though, which is great. This 5 minute we're on does not have that lower wick. A lot of times that is a sign that we might make our way back lower again, but that's just off of the candlesticks, right? Markets don't move off of candlesticks. Candlesticks are the reaction to the way the market moves. Don't get that confused. Some bars right there, man. VIX at that key level. ES also pulling back. This purple area was support overnight, and now it is looking like it's trying to become some resistance. Gold still pulling back. I might wait for gold. See a better reaction on gold. That's a long, yeah, it's a long wick on gold, right, man? Look at that, bro. Look at that. 277 pips on gold to the upside from those lows. Or I'm sorry, 2,600 pips if you're looking at XAU USD. Interesting how that works. Let's see. Yes, look at that. Pulling back. One of the main reasons I'm not going short in the market when NVIDIA is showing strength. NVIDIA is 8% of the S&P 500. No, thank you. I want to trade with that trend. Gold could perhaps use the 4,000 tap move as liquidity to push towards 4,100. That is very true too, right? That's also an opportunity. We hold that 4,000 on XAU. We make our way back to 4,100 all the way up here. Another sweep to the upside. Now, if you are looking for longs on gold, I would 1,000% say you have to wait for this hourly to close right here. We have 30 minutes left. The hourly is already showing that it has made its way lower. So if markets made their way in one direction already, it's just that much easier for it to continue or make its way back lower again. So just something to keep in mind. And don't forget too, if you are looking for those longs, where's your stop loss? Are you entering all the way up here with your stop loss all the way down here and then looking for this target? It's almost a 3-to-1. That's not horrible. But again, 30 minutes left in this hourly. That's plenty of time for the market to move right to where the market just was. And markets love doing that. So I'm waiting on gold for a possible pullback. A short would be great. ES and NQ, I'm so happy we didn't just jump in random shorts again. That's the way we do things around here, is we stay patient and we let markets come to us. Ladies and gentlemen, run that like button up for one last time. We're going to be wrapping up market in the morning right here. Great trades today, great analysis, and phenomenal breakdowns. Don't forget, you guys can find me on X on Twitter is at Trade with Kev. You can find me on Instagram is at Trading with Kev. That's like right over here. I appreciate you all for joining every day. It is Monday. It is June. What is it? It's June 29th. Guys, I will see you all back here tomorrow. Tomorrow is Tuesday. I will see you tomorrow back here within the lab, having another great trading session. Great work, everybody, on catching those shorts on NASDAQ. Really strong trade. Yeah, 24-hour stream today. Yeah, we'll see about that, man. All right, everybody, have a great day. I'll see you all tomorrow. Peace, and don't forget to trade and manage your trades properly. Never risk more than you're willing to lose. I'll take a sell again. Get it, man. Get it. And guys, never feel bad or hesitate to reach out. I'm going to drop the Discord link to the market Discord right now. Come join. Come say hello. At me if you want to. If you have any questions, share some charts, whatever you guys want. I'm always happy to help. Have a great rest of your day, everyone. I will see you all later. Peace.